Good morning, everybody. This is Patrick MontesDeOca with the VCPMI Early Bird Update for January the 5th, 2021. Good morning, everybody. This is Patrick MontesDeOca with the VCPMI Early Bird Update. We're going to jump right into the MontesDeOca live trading room here. And gold is trading last at 1942.60. It's down about 370 here. The silver market also slightly down, unchanged actually. And we're looking at the E-mini has caught a strong bid, trading above the average price, activating a bullish trend momentum for the day. The market got up to 1956 this morning. 1962 was the daily target, daily and also weekly, 1962. This is a harmonic level that I'm expecting the market to accomplish, and then we can see where we may be headed in terms of the price. But right now we are in an oversold condition here. We're coming down into this level of Fibonacci retracement of 23.6% with a daily average of 1934. Let's watch the market here for a little bit and see what the day trading volatility or momentum is trying to define for us in order to identify a day trade. For the longer term position is obviously almost unchanged, is slightly lower, and it's just a question of allowing for the market to consolidate these gains that we made here from yesterday and see what the momentum is going to unfold or resolve into. The United States manufacturing purchasing manager, the purchasing managers index came out at 60.7% versus 56.6%. And so that's slightly bullish, obviously, and this is what's given the equity markets a little bit of a bid. And you can see that the E-mini has activated a buy signal here, not only on the weekly buy, but also on the average price daily of 37.07. So we seem to be moving into a fast market, and I am looking for an ideal entry point with a low risk reward ratio, as this trade seemed to be a little richer than I would like to take the risk on. But nevertheless, the market is activating a bullish trend momentum here, and the weekly average price of 37.26 has been activated. the average price for the day today is 1934. And we are trading in between the weekly. Let me correct this here. This should be the sell 2 level. Well, this should be the sell 1 level, which is the first level of resistance. And so we're trading in the range of 1925 to 1962, which is the weekly area of a distribution of supply. And the daily numbers are trading within that trading range, within that weekly trading range, with the same target of 1962. So I'm going to hold on to 1962 before I decide one way or another here what I'm going to do with my core position, or even consider a day trade for the day. This would be the level that would be activated. Either the market is going to go up to 1962 or revert back down to 1919, ideally even 1925. So we're in a bit of a trading range, you might say, into an area of distribution of supply weekly or resistance weekly, while the daily is in an uptrend with a target of 1962 is pretty much the way you interpret this. One of the things I want to recommend all my traders and subscribers that are following me here is that we need to take a look at the fact that the market has broken out to the upside. Trading above 1912 was a major breakout to the upside. That was the previous resistance level that needed to be broken. And we are underway basically to accomplishing the upper end of the Fibonacci trend line resistance, which is in that 1985 level. We have broken out through the resistance Fibonacci trend lines that you see here and are in an acceleration phase all the way through this resistance level daily and weekly that point to a 1980, 1976 targets. So this is what pretty much the pattern, the daily pattern is. And we're letting the market pretty much take us home. So one of the things is you want to be patient on this markets, not just because these numbers indicate resistance level. It means that the market is going to sell off from there. We want the price to trade through that level and define the strength of the supply or the demand that's being traded at that level. And that would be reflected in the price, just like it did yesterday here when the market went up about $50 and it created this green bar, which was coming out of this breakout on the 30th of December that occurred. And we're in this uptrend pattern that essentially is pointing all the way up to the 1980s level. Once again. We had a very strong day yesterday, and it wouldn't be out of the question, obviously, if we get a little bit of a pullback, a little bit of a correction into this price level to identify the support, to identify pretty much where buyers may show up again. Very quiet morning. Still, pretty much the market is waiting for the Georgia election this Wednesday, and in the meantime, it's going to be pretty choppy, I believe. In the meantime. The market that we have a lot of activity is in the crude oil market. The energy markets are beginning to catch a bit as well here, as I believe things are beginning to anticipate the possibility of coming back to some kind of normality in consumption. And we're trading at 49.71, pretty much $50 a barrel after a low that we saw of $6.50 here. And in fact, it went negative in March. It went negative $35 as the market collapsed. And now we're looking at a $50 gain. So we've gone up about $80 from the low in March, which was a negative $37. So this market's volatility is truly remarkable in that we can see a recovery, you might say, in a relatively short period of time. And this is one of the things that I want to point out to you that I'm observing here, that the magnitude, you might say, of the volatility levels are adjusting themselves to what's happening here fundamentally in the economy. And, we're beginning to see extremes occur rather quickly in a short period of time. We're beginning to see moves in gold of $50, $100 in a relatively short period of time. We're beginning to see moves in the silver market of $3, $4 moves within a matter of days. And this is highly unusual. But what I think we're adjusting to is the tremendous amount of leverage that we're facing with this pandemic here, as we move into the critical phase, you might say, of the pandemic here, which is to resolve the vaccine distribution as quickly as possible, and get Main Street back to some kind of normality as quickly as possible. So I am looking for the market to continue to move to the upside here as we have completed this low that we made last year of 1767 on November the 30th, which happened to be the low for the year. It completed a bottom for the year, and we are breaking out again of this Fibonacci trendline resistance here. And so for all intents and purposes, it looks like the gold market has established once again a major uptrend unfolding or continuing. Market is a little bit oversold here for the day. Very quiet market here. It's one of the quieter days that I have so far seen at the beginning of this year. The quiet before the storm. I want to point out a report that we published here in Seeking Alpha on January the 3rd, which was the monthly report. And pretty much the monthly trend momentum was 1861. And because the market closed above it, we came into this month with a bullish trend momentum. The monthly average price is 1864, and with the market closing above that average price, it came in with a bullish trend momentum for this month as well. And the VCPMI also gives you a protective level that if the market closes below 1864, that it would negate this bullishness identified by the VCPMI as neutral. Now, the market was trading on Friday, pretty much into that 1895 level, I believe. It closed at 1895. And it told you basically that because the market traded above the average price of 1864, it activated the sell one level of 1950 to 1998. And what we saw here today was 1956 completed. So we have completed the first monthly target of 1950, and we're looking at 1962 daily target today to 1962 weekly target today. And so here's how you can begin to identify where your targets are located and pretty much what to do with them. So being that the monthly target of 1950 was accomplished, that is telling me that the market is entering a bigger level of resistance. And we want to see basically how the market reacts, or how the price reacts when it gets up to these levels here. As you see here, we got up to 1956, which was the high for the month, and the market reverted right back down, because the AI tells you that once the market begins to enter into this area of distribution of supply, the probabilities are very high that we can expect sellers to come into the market, selling pressure or supply to come into the market. And that's what we saw this morning, with the price getting above 1956, reverting right back down, testing that 1950 again, and testing the levels of support underneath the market. Now, for all intents and purposes, the fact that the market closed below 1950 here, 1948.80 is at 6:45 a.m. It activated a monthly bearish trigger. And from 48.80 to 41.80 already made and established a low. So it gave you, as a day trader, an opportunity to quickly, make a few $100 if you want to risk taking this trade, if you're using the monthly indicator. And so we're beginning to see the monthly indicator, unless the price closes above 1950 again, which will negate the signal. We seem to be entering an area again of distribution of supply or resistance between 1950 and 1998. 1962 is the daily and the weekly targets. So, I'm comfortable in waiting for the market to resolve the supply and demand, at 1962, 1950. And that's what I'm waiting for. In the meantime, I'm just patiently waiting for the market to activate the signals. Just to refer to the Bitcoin Investment Trust is just making highs every day here. We're at 36.85. New high was made today, 37.10. And this is obviously an acceleration of this asset, and it doesn't seem to have any indication of reverting back down, although there is a risk that we can come down again to 21. So it's way overdone up here, and caution is warranted up here if you're long on this instrument. 1950 again traded. And so we are getting some buying interest up here. As you can see, we came right down into that 23% Fibonacci retracement and found buyers. And so continue to hold long and be patient. And let's take a look at 1962, and see what the market does when it gets up there. But right now, there are no day trades. I'm holding on to my long position and continue to build equity. Very quiet day. I'm making a point here of showing you how I trade the market from a mathematical system, not necessarily the fundamentals that we have right now, which are completely skewed, very confusing, and every day it changes. And so to keep me straight, so to speak, in following the energy of the market, and I use this indicator as a GPS that guides my trading to the highest probability levels that can be identified for a self-directed trader. And that's what I want. I don't want to just trade for the sake of trading. I want to be able to trade the highest probability trades. We are currently updating our live account that we're trading, and we had a very, very successful year in that our trading account, and this information is being published on MontesDeOca.com, but this is the inventory that I'm carrying, and we've been able to end the year with an estimated profit of $1,076,081.50. And this has been on a $250,000 account. You will see this posted on your website, MontesDeOca.com. And during this time, basically, since we've been trading live here, I have recorded over 250 hours of live trading, of which during this time, I have executed this intelligence and produce pretty much this amazing results. we made $1,076,081.50 in 2021 using the VCPMI, which stands for the Variable Changing Price Momentum Indicator. The letter of direction program that is run by a designated broker with an initial $20,000 day trading only signals, we ended the year $33,942. So you're looking at about a 75% profit on day trading. And these are signals that are produced by the VCPMI and are executed by a designated broker. So feel free to go to our websites here and check out the updated results for 2021. I make a point of prospectively coaching, mentoring my trader subscribers here in my private trading room, where we execute pretty much this information live, and I use this private trading room basically to share how I distribute, how I apply, and how I use this information for the benefit of my own account that is disclosed here on the website, ema2tradelifesignals.com, and also for day trading signals that can be followed by a designated broker. If you, as a self-directed individual, do not have the time to sit in front of a computer and execute the signals, there are alternatives that you can use to apply the VCPMI. Just reach out to us, contact Ticket Talker, send me an email. We're here to help you become the most successful trader that you can be, allowing you to be the master of your own destiny, pretty much, and just providing you with this incredible trading tool that you can use again as a GPS to guide your trading. We've seen a little bit of resistance here on the E-mini into the average price, and now we are activating a bearish trend momentum by the price trading below it. So we seem to be all over the place here with regards to the E-mini. And the silver market also is in an area where it found some buyers, some support. Very quiet day. 48.80 up to 20. 1956 has been the high so far today. Coming back up above 1950, 51 on gold. Silver, 27.54. $50, 60 bid, up $4 here. 50, 70 offered. So we seem to be moving up a little by little. Let's see what it does when it gets to 1962. We seem to be pretty quiet on the derivatives as well. After a little bit of profit taken early this morning, obviously. $50.90 bid, $50.90 bid, catching a bid. 51, 51.20, traded. We seem to be picking up a little volatility here. So 1962 is the target in place. Keep that in mind. 51.70 traded, 51.80 offered here. We seem to be catching a bid. We're picking up a little more volatility here. $50, $80, $50, $80, $51, $50. It's trading around $50, $51. So this is a very quiet day, and it's the beginning of the year, and the market is trying to obviously define what the fundamental picture is with regards to the stimulus, with regards to everything that's been laid on the table. And pretty much it has discounted, a lot of this news that we've been talking about it in the media. And I think it feels like there is a solid bid underneath the market. Getting through that 1912 got us on the upper end of the trading range that points to, again, that 1980 level, which I think is the critical level before we get more excited about this market moving higher. I think we got to challenge that 1980 high, and closing above it then puts into perspective, you might say, the highs of 2089 to be challenged at that point. The gold market obviously is lagging the moves on the Bitcoin or virtual currency markets. Bitcoin being at 20,000 is incredible. And, gold is trading at 1950. It's only up 20, 30%, you might say, while Bitcoin is up 600, 700%. So there is a tremendous disparity, you might say, in those values. And what it really represents is the lack of confidence in the US dollar, that investors are looking for a way to pretty much protect themselves against what inevitably is the collapse of the U.S. dollar, as we knew it, especially in creating this money out of thin air. It's eroding, again, the purchasing power, the intrinsic value of the U.S. dollar. And it really puts it in question, so to speak, particularly as we move into this environment of interest rates going down to zero, negative rates. So it's a tricky place that we are in right now in terms of the monetary system, and it's not only here in the U.S. We have a lot of problems with the pandemic in Europe. England is going into a third lockdown, and we have yet to see the economic implications of this. Although the market is trying to take a look at the end of the tunnel, so to speak, at the light at the end of the tunnel, in the fact that we are getting vaccines, that we have we have started the process of vaccinating, but logistically speaking, we seem to be running behind where we should be here in the United States. And so there are a lot of uncertainties in every way, politically, economically, and this is what is making the gold market a very strong choice in terms of protecting yourself, in terms of a safe haven, so to speak, asset that you can move into in times of turmoil. $49 bid. So we've been trading around all this whole morning pretty much so far into this level. And I think the longer that this level stays here and the fact that sellers can seem to bring the price down is a pretty resilient sign of the kind of strength that's underneath the market. And I think it's only going to support attracting more buyers to come in here that I believe are going to push the price up into that 1962 level. $49.50 bid. Traded $49.50. Very quiet morning. The fact that the crude oil market is catching a bid is a good indication that the energy markets, or at least, are beginning to anticipate some kind of consumption coming back into the market. And so we've risen, $2-3 here in just the last few days, with a high of 50.05. And so this is the first indication, I would say, that the market seemed to be discounting the possibility that we are looking at the light at the end of the tunnel over the next 6 months, possibly, for us to begin to come back to some kind of normality economically, and also with regards to our own spending habits. So, one of the questions that I asked myself again in what you see here is, for example, in the price of crude oil is the reflection, just the market anticipating that things are going to come back to normal here in the next few months. And so you're beginning to see the volatility reflected in the price. So we're trading at $50 a barrel now, and we're not even back into a normal economy. And so you can see where we're going with this, that as the economy goes back into some kind of normality, consumption begins to increase, that we're going to see incredible moves in volatility in commodity prices, energy prices, food prices. Lumber is going through the roof, and so any product related to an economic recovery obviously is going to be well bid, and that's pretty much what I'm looking at in interpreting what the market is trying to identify for me with regards to the economy as we move forward. Markets always tend to anticipate, they tend to discount a lot of the fundamental news that we hear, in Main Street media. We've been trading in this area of 49 to 50 pretty much all morning. With an upward bias, the daily trend momentum is up. It's bullish. The daily target is 1962. The weekly average of 1893 has activated a weekly bullish price momentum, with the first target of 1925 completed and the second target of 1962 currently being active. It seems that the market has found a level of support that is comfortably holding in that 1950 area. Very quiet, even in the silver market. So what I would recommend here, just to review, is to continue to hold your long position strategies. If you're hedged, or if you're protecting yourself, I think that you want to keep what I would say conservative approach up here at these levels here, because the reversion can occur anytime, and it can bring the market back down into that average price and even below the average price. We're getting $50, $60, $100 moves, and what I would say to you is that this is just the beginning of volatility. I think that we're going to see far greater moves in the price of gold that is going to surprise a lot of people that particularly have not traded in the gold market. So continue to hold your long-term uptrend bias and use any correction, as an opportunity to add to your positions. And let's continue to see what the price does for the rest of the week. But in the meantime, I want to thank everybody for the privilege of sharing, again, this information with you. And I really sincerely hope that when you come here every day, you're becoming a better trader. Have a great day. Take care of yourself. I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
The Ticker Talker app brings the powerful trading technology tools of the Ticker Talker desktop platform into the hands of its users who are on the go. Ticker Talker connects novice and advanced traders